Ladies and gentlemen, good day and welcome to the Q2FY23 earnings conference call of Dwarikesh Sugar Industries Limited, hosted by Dolat Capital. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Tejas Sonawade from Dolat Capital. Thank you, and over to you, sir.
Thank you, Fazan. Good afternoon, everyone. On behalf of Dolat Capital, I would like to thank the management of Dwarikesh Sugar Industries Limited for giving us the opportunity to host their Q2FY23 earnings call. From the management team, we have with us today Mr. Vijay Banka, their Managing Director. Without further ado, I would like to hand over the call to the management for their opening remarks, post which we will open the forum for a Q&A session. Thank you, and over to you, sir.
Very good afternoon to everyone. I invite you all to the earnings calls of Q2FY23. Our results are already in public domain. The quarter the quarter which went by has seen contraction in the earnings. We had a good turnover. Turnover was 542 crores with 506 crores as compared to the corresponding quarter last year. But our EBITDA, etc., have been on the lower side, and I'll explain the reasons for that as we go along. So, we have had EBITDA of 31 crores approximately. We've had some good saving in the finance cost, which is about 6 crores. But profit after tax is 7.84 crores, which is as compared to 39.63 crores as the corresponding quarter last year. And we have sold, let me brief you about the sales numbers. So during the quarter, we sold about 11.49 lakh quintals as compared to 12.06 lakh quintals in the corresponding quarter last year. The entire sales during this quarter, as well as the corresponding quarter last year, was domestic sales. And in the H1, we have sold about 26.78 lakh quintals of sugar, which includes 5 lakh quintals of sugar that we exported, as compared to 21.7 lakh quintals of sale that we had in the corresponding half year last year. That was all domestic. So if you exclude the export number, sales numbers, both for the quarter and for the half year, they looked very similar. We have had a stock of minuscule stock of 1.81 lakh quintals in this on the 30th of September, which is obviously has been sold in this month of October. Insofar as industrial alcohol is concerned, we sold about 22,257 kiloliters in Q2 and 37,892 KL in half year. So again, this number is, insofar as the quantity is concerned, is better as compared to what we did in corresponding quarter last year. The reason being, we have been able to commission our Dwarikesh Dam distillery project, which commenced commercial production on the 7th. Of course, both the distilleries got closed around the first week of September because we had exhausted the BAB molasses stock which was with us, and then we had to open the plant for repairs, etc. And in case of Dwarikesh Dam, obviously there were no repairs, but we had to make good all the, whatever the learnings we have had, we had to set the plant correct. So our term loan profile is it's about 309 crores. All our loans, as I have repeatedly mentioned, they are all at subsidized rate of interest. We have one term loan of UP State Government, which is where the outstanding amount is 47 crores. And the rest is for the distillery project. All installments, whenever due, have been paid on time. And I mentioned about the contraction in the profitability. The main reasons are, I'll first talk about the non-recurrent expenditures that got accounted in this quarter. One is relating to the wage board arrears, which had to be accounted for. Of course, it will be paid in due course of time. It has to be accounted for, had to be accounted retrospectively from 2018. So that entailed an amount of 9.77 crores. Then for the entire season 21-22, the levy obligation of molasses was increased from 18 to 20%. So which means we effectively lost an opportunity to convert about 34,000 quintals of molasses into ethanol and then sell it. This molasses, of course, we had to sell at a non-viable price of 210 rupees at 20. So then the third reason also was that during this quarter, when we started our DD distillery plant, obviously there were some teething issues. So the yield was not as per our expectations. So now all the corrections that are required at the plant have been made. So now going forward, we should get as good yield as we are getting in our DN distillery unit. So these are one-off factors, but more importantly, that we have had to, in the season 2021-22, our cost of production went up. 2 rupees a kg went up on account of increase in the raw material price, which was increased by 25 rupees at 20. And there was approximately 1 rupee increase on account of lower recovery. So I must mention here that we have already started the season 2022-23 at 2 of our units. And the third unit we will be able to start our crushing on the 8th of November. As per the trends available, in spite of the rains, unseasonal rains in October, the recovery should be better than what it was last year. We hope that we will be able to make up some ground that we lost in the last sugar season. And we are going to use cane juice directly for making ethanol during the duration of the season in DN and DD distillery unit. And across all 3 units, we will be producing and generating and storing BAB molasses, which will be used for making ethanol during off-season. So the entire dynamics of our working will be undergoing a change because for the first time, we will be using cane juice for making ethanol. In the process, of course, we will be sacrificing sugar production substantially. If you recall 2 years ago, of course, in the last 2 years, we have been generating BAB molasses. In the year ago, last year, we generated BAB molasses in 2 units. This year, we will be generating last year we generated BAB molasses across 3 units. This year, we'll be using juice in 2 units. So the entire dynamic is going to undergo a change, and then we cut in the production of sugar by about 30%. So our dependence on sugar is going to come down. This will broad base our revenue. So that's about it. And I would now open the forum for the question and answer sessions. Please go ahead and ask me questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. This is the operator, Mr. Banka. While giving the opening remarks, the audio was slightly muffled.
Okay.
Yes, sir.
I'll make effort to increase my. I'll talk a little bit louder.
Okay, sir. Thank you. We'll take the first question from the line of Resham Jain from DSP Investment Managers. Please go ahead.
Yeah, hi. Good afternoon, sir.
Very good afternoon, sir.
Hi, sir. So, a few questions, sir. So, the first one is on sugar season 23. How do you, how should one see the overall sugar production? Because you mentioned you'll be making, sacrificing some sugar for juice. So, based on what you mentioned just now, how much will be the sugar production and how much is the expectation for the ethanol as well?
Okay, I'll talk about the country's production first, because yes, a lot of progressive companies are going to use sugarcane juice directly for making ethanol. But we see ahead a bumper sugar production season 2022-23. If you read ISMA's remarks, they're talking about a number of 36.5 million tons of production for 22-23, which is after sacrificing 4.5 million tons of sugar production in favor of ethanol, which means effectively the country's gross production will be 41 million tons. Now, coming to our production, you see, we expect similar or slightly more crushing numbers because the area under sugarcane has been a little better. Well, the impact of rainfall during the October, late rains in the month of October, it doesn't seem so threatening as it was in the last season. So we should be able to see some improved crushing numbers. Insofar as production is concerned, if we take about similar crushing number 380 lakh quintals, and if we talk about a recovery of 12.25% gross, so there will be a sacrifice of nearly 30%. So I think anything between 30 to 35 lakh quintals is what we see will be our sugar production in the coming season. And about if you talk about sugar season per se, we should be producing and selling about 11 crore liters of ethanol.
Okay, understood. And in terms of profitability, how will it change once you will sacrifice sugar for ethanol? Because ethanol is more of a assured, in a way, margin business compared to sugar, where the prices can see some amount of volatility. So how would you look at the overall profitability with this shift from sugar to ethanol?
Obviously, making ethanol is more profitable than making sugar, at least at the current price, market price level. So we have had a very flattish year insofar as sugar prices are concerned. So even if we assume there is some improvement, or let's say about 200 rupees improvement in the profitability, 200 rupees improvement in the sugar prices on an average for the entire season, for the entire year, still at the given prices and at the expected increase in the prices of ethanol, making ethanol will be obviously more profitable. It's going to be our first season insofar as making ethanol from juice is concerned. So we are yet to discover, we on paper, yes, of course, this looks more profitable, but how much more profitable, considering the fact that we always clock better recoveries, so whether how that will get reflected in the numbers, we will have to wait and see. In a matter of 1 or 2 months, it will be abundantly clear.
Okay. And sir, just to understand the equation, compared to B-heavy, if you will be manufacturing through juice, how much better it will be in terms of the overall economics?
See, B-heavy juice availability is limited. So here we should not compare B-heavy vis-a-vis juice. We have to compare sugar vis-a-vis juice. So it's definitely more profitable because B-heavy generation will continue as it was in the last year. So, during off-season, we make use of B-heavy molasses for making ethanol.
Okay. And so my last question is on CapEx. Any ongoing CapEx and any future plans? If you can just update on
we are evaluating a couple of proposals. By January 2023, we will be very clear as to what all we are going to do.
So currently, there is no projects which are going on in any of our.
Our focus is now on the start of the season, so which has not now commenced. So now we'll start working on the project-related one.
Okay, and this new proposal, is it related to
Quite a few of them, like small increases in the capacities at our DN and DP unit, and then there is the refinery at our one of our units. So these are the proposals that we have in mind.
Okay, understood, sir. Thank you and all the best.
Thank you. Thank you, sir.
Thanks.
Thank you. The next question is from the line of Anupam Goswami from B&K Securities. Please go ahead.
Hi, sir.
Hi, good afternoon, sir. Good afternoon, sir. How are you?
All good, sir. I had some doubt on this export restriction. So then the industry is, to be back at a similar closing stock of like 5.8 to 6 million ton, we need about 8 to 9 million ton export. So now this restriction that has been extended, where do you see what's going to be the outlook scenario for it? That's my first question. And second is Dwarikesh being this quarter with such a low inventory. And do we, fulfill our quota for the third quarter in terms of sugar, as well as how much can we do ethanol in the third quarter? Being you also mentioned that your distillery were gone for maintenance because we have run out of molasses. So that's where it is. If you can throw some light on it, sir.
Okay. Talking about your first question, well, there is a bit of a scare which has been created by this news report which came that there is going to be restriction on export of sugar. Now, by restriction, they mean regulation. They mean regulation, not ban on export. So they mean that the export will be regulated. Now, insofar as our informal talks with the government officials are concerned, and as you may have read in various newspaper reports, the first tranche of export quota of 6 million tons is expected to be announced. Maybe it will be announced today or maybe tomorrow. We were expecting announcement on this for at least a week ago, but then for some reason or the other it's got postponed. But 6 million tons announcement is expected anytime, and that will be MEEQ based announced quota. So under that quota, we expect that about, it will be tradable quota. We expect about 80,000 metric tons of export allotment for us. Now, 3 more million tons, maybe 2, maybe 3 more million tons of export quota again expected to be announced sometime in February. Because 8 to 9 million tons, as you rightly mentioned, has to move out of the country if we have to maintain similar closing stock levels. So, with this being a bumper sugar production year, the numbers speak for themselves. Opening stock of 5.5 million tons, production of 36.5, so which makes sugar availability of 42, and then so we deduct from that about 27.5 million tons of consumption. 9 million tons goes out, 8 to 9 million tons goes out. We are back to the number of 5.5 million tons at the close of the season 2022-23. So, the officials, the government, they are very positive, but it's all, whatever delay that we are seeing is all very procedural. Okay, what was your next question, sorry?
Sir, your inventory being so low, can we fulfill our third quarter quota?
Yeah. Now, you see our distillery at DN has, sugar plant has commenced, and our distillery will also commence operations in a day or two. We are awaiting for a few approvals to make juice for making ethanol. It's a question of just about a day or two. And in DD, already the approvals are in place, so DD distillery is going to come in. So, insofar as our ethanol quota is concerned, we will be fulfilling. We have a balance of about 50 lakh liters to be supplied under the contract that we have entered into with the OMC. So, we expect not just 50, more quantity to move out in this month of November. Insofar as sugar sales is concerned, well, we have had a minuscule quota for the month of November. Because our stock virtually as on date is zero, and we have contracted to sell about to export about 50,000 metric ton of sugar in anticipation of the export policy. So we are making raw sugar at 2 of our units. Where we will be making in one unit. It's already commenced. In the other unit, raw sugar will start from the 8th of November. So we're going to sell about 50,000 metric tons of raw sugar during this quarter. And of course, whatever further domestic release orders we will get, we will of course be able to do that.
Okay. Okay, sir. Sir, I'll join back in the queue. Thank you, sir.
Sure.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Amber T. from Geomatrix. Please go ahead.
Very good afternoon, sir.
Hi, good afternoon. Good afternoon, sir. I'm okay, thank you. I'm a little surprised at the results. So I actually have several small questions. It shouldn't take long. Mostly around these factors that you mentioned in the opening. So this, I'm trying to understand this change that happened from the government from 18 to 20% for the molasses. Any reason why this happened, and can it keep repeating? And also, what was the extent of the loss financially? If you had 34,000 tons, or quintals, of molasses that you had to sell at 210 rupees, then what was the loss of the ethanol? That's my first question.
Okay. So can we answer one by one?
Question is, one by one. I think one by one is better. Yeah.
Okay. So you see this quantity percentage which was increased from 18 to 20% is for the entire molasses that we generated during season 2021-22. Most of which was in the last financial year. Only a part of it was in the current financial year. So we had to additionally give about 34,000 quintals of sugar. Now, if we consider a yield of about 30, if not more, we could have perhaps made about 10 lakh liters of ethanol, which would have got sold at approximately 60 rupees. So, which means we could have generated about 6 crore rupees of revenue from that with no incremental cost. Whereas this 34,000 we have been able to sell at 210 rupees, so 70 lakhs is what we have got out of that. So that will explain the financial impact of this particular policy measure. Now, why this percentage is increased is because there are reasons which are number one, the country liquor consumption has gone up in Uttar Pradesh. Now, whether it has really gone up in Uttar Pradesh or it is moving away from Uttar Pradesh, we don't know, because Bihar is a neighboring state where there is prohibition. So I wouldn't rule out if some amount of country liquor from UP is going out of UP to Bihar, because otherwise this percentage should not have risen at all. I mean, when the government first picks up.
That this means that molasses is something that you need, and without any clue, the government can just take. They could make it 22, 24 tomorrow. They could make it anything, right?
Absolutely. They could make it. They can make it. It's just that, our request and our appeal to the government is whatever you do it upfront. You don't give us surprises later on. So, of course, for them, the exchequer of the state is very important. So we are in a way subsidizing the liquor trade, country liquor trade in Uttar Pradesh or maybe the neighboring states. So that's the reason why it's gone up. Yeah.
Second question is, sir, this yield reduction, from the new plant, the one that you saw from your new 175 KLPD, was this expected? Or was it because it's a new plant? Was it because of
it's a new plant.
How much can you expect to?
So we have had a yield of about 28 liters per quintal of molasses. Similar molasses, we have recovered about 30 liters per quintal. So that again translates to about 5 to 6 crores. So this is very typical for anywhere.
Back.
Yeah, of course. Now everything is stabilized, and the period of trial tribulations is all over now.
Understood. Sir, you mentioned exports for the next year. Approximately what price to you would you have built in?
We have
this 50,000 tons?
we have contracted exports of about 50,000 metric tons at 36,000 rupees metric ton on FOR Kandla. So if you take away 2,000 rupees logistic cost of transporting sugar from our units to Kandla, so our exact realization is approximately 34,000 rupees, which is for raw sugar. If you consider the advantages of lower cost of production, faster movement, faster rotation of flow.
You mentioned that many times. Yeah. Just theoretically, had this been refined, what would have been the net to you price?
That realization would have been much more higher. Unfortunately, we don't have a refinery, sir.
You don't have a refinery.
Okay, then next that realization, I am aware sugar mills are contracted to sell refined sugar at exact realization of 38,000 rupees a quintal.
Okay. Yeah, next, quickly, one of my last questions is cane diversion from the industry. Is it closer to 4.5 or do you think it can touch 5?
For the next coming season, sir, it could touch higher, sir, but this is just a random number. I don't know how this number has been computed. It could be higher because we're going to see very enthusiastic participation of sugar mills insofar as using juice for making ethanol is concerned.
Right. So last question, what have you done to your balance sheet? I found it very hard to understand with all the cash and you suddenly become a cash-rich company and the inventory has gone to zero. Could you just walk us through what exactly has happened this quarter? So much debt has been retired.
Sir, we have had a good releases, so therefore our stock levels are the lowest. All thanks to our focus on ethanol and exports. So the weightage insofar as the domestic releases is concerned is that much more higher. The production of sugar also has been lower. So this has all resulted in building up of cash and cash equivalents. So going forward, our requirement of working capital is going to be substantially less than what it was in the coming season because last season our requirement was after factoring for 13 lakh quintals of opening stock. So yes, going forward, our working capital requirement will be so much more lesser.
And do you see any substantial improvement in the amount of cane that you can crush this year, or it will be marginal, 3-4-5%?
3-4-5%, not more than that. Because in Bijnor district we are more or less saturated. So whatever increase we're going to get it from our unit in Bareilly district.
Okay. All the best. I'll email you privately some other questions. Yeah.
Thank you, sir. Thank you. Sure.
Thank you. Bye-bye.
Thank you. The next question is from the line of Rajesh Majumdar from B&K Securities. Please go ahead.
Very good afternoon,
Good afternoon, sir. Yeah, very good afternoon to you also.
Yeah. Sir.
So I just had two questions. I mean, most of my questions are answered. That this UP increase in wages, was it not accounted for earlier because we didn't make a provision for this and suddenly it comes out of the blue, this 9 crore?
No, it was on the cards, but it was not, the quantum was never known. And it was the gadget notification only came during this quarter. So it's there, it happens. I mean, it's a once in 5 year phenomenon, so it happens. It does happen.
So 9 crores is a 5-year kind of impact, is it? So annualized impact
from 2018. I think we mentioned the date also. It's from the 1st of October 2018 till date.
And what's the annualized impact of this?
Annualized impact will not be much. Annualized impact will be about, in percentage terms, hardly anything, but maybe about 1.5 to 2 crores.
2 crores, right?
Yeah.
Okay. Right. And secondly, sir, my question is how confident are you about the recoveries being 12.2% plus, given the fact that we are just into the crushing season and we still don't know whether there'll be other situations like red rot, etc., which has happened in the past and recoveries have been impacted. So how confident are we of recoveries in this sugar season?
See, last year also we had this phenomenon of late rainfall in the month of October. So we have had similar phenomenon this time. The only good thing is last year the rain was accompanied by heavy winds. Heavy winds, so which resulted in lodging of sugarcane in many areas, so which was obviously stunted the growth of sugarcane, lowered the yield of sugarcane. So this year we have not seen any such phenomenon, and I'm expecting improved recoveries based on our lab results, because the kind of sugar content that we now see is little better than what it was on the corresponding day last season. And after the late rainfall, there has been no rainfall, so the water from the fields which had got accumulated has retreated. So, you see, we had achieved much better recovery numbers in the past, so there's no reason why we should not at least make up for little of the lost ground last season.
So the late rain impact of maybe 3-4 days is marginal in your opinion, right?
No, I mentioned there are 2-3 reasons. One is the wind which accompanied the rains in the last season, which was not much. Okay. And as on date, and thereafter, the rains came and then the rains halted, and thereafter the water has got retreated from the fields now. We now don't see any water accumulation in the fields.
Okay. And I think last year the crushing was delayed much further, right? We started crushing this year much earlier compared to last year.
No. I think it's around the same time. In fact, a day or two before. I don't remember the date when we had started. In fact, this year we are planning to start crushing at our Bijnor units on the 18th of October, but unfortunately, because of the rains, it got delayed by 10 days.
Right. And sir, my last question is on this blending. Our current run rate, as I understand, as of data given is 10.7%, and going by the additions in capacity, etc., which is coming in, what is the realistic time frame to even achieve the 20% blending target? A. And second question is, Niti Aayog has given a 50-50 kind of ratio between sugar and grain to achieve this target. How realistic is this, and will we see some change in this going forward?
So, you see, we had crossed the 10% blending target in the month of July as well as in the month of August. But September, October, November typically are very lean months. So, although efforts are on to increase the ethanol supplies, my own guess is that we may not end up with 10% blending. So, how good we are to go to 20% within the announced time frame? I think the blending numbers will be substantially better in the season, because we are going to see very enthusiastic participation of sugar mills in making ethanol directly from cane juice. So the number is obviously, the production number of ethanol is going to be a lot better. Capacities are coming up further. Of course, government is making all the efforts to ensure that even the weaker sugar mills are able to set up capacities. They've been extending the timelines for putting up the ethanol project, so that the units are available for availing the subsidized rate of loan, that subsidized rate of interest. So all those efforts are on. So we will have to wait and see. But sugar mills, they are doing whatever is within their capacity to increase the ethanol supplies. Now, talking about your question on whether we will have 50-50 kind of a ratio between ethanol made from sugarcane and then ethanol made from grain. A lot of ethanol capacity based on grains has come up, but I think a little bit we got thrown off guard because of the war situation and consequently rise in the price of grain. So, it's a difficult question to answer how good we are to go to 20% in 2 years' time.
So my related question was that will sugar mills do more capex on the juice side in case the grain equation is unfavorable, and as we see playing out?
Well, yes, that's a good question. See, it's like this. Presently, there is a particular price to ethanol which is made from juice directly. We have been clamoring, we have been talking to the government to increase the price of ethanol based with sugarcane juice as the feedstock. If there is an increase in price, I'm sure many sugar mills will be able to make their sugar assets redundant, in the sense that, for example, like I said, we are going to cut down on our sugar production by about 30%, which means we are going to make our sugar assets redundant by 30%. So if the prices go up further, I'm sure sugar mills will be able to add up more capacities, and they'll be able to focus on more generation of ethanol and lessening the sugar production.
Is there any tipping point in terms of the juice expectation that you have, in terms of whether it's 3 rupees or 5 rupees increase, where this kind of a major change in the capex structure may happen? Any kind of ballpark figures on this?
We have been asking for from the existing level about 4 rupees increase, so that there is a decent IRR after considering for the redundancy in the sugar assets.
Okay. Thank you, sir. Thank you very much.
Thank you, sir.
Thank you. The next question is from the line of Nikhil Gada from Abacus Asset Manager. Please go ahead.
Yeah. Hi, sir. Thanks for the opportunity.
Very good afternoon, sir.
Very good afternoon, sir. Sir, my first question is on the sugar production numbers. So, when you say that we are going to do this 38 lakh, metric tons of crushing, is this for the sugar season 22-23? You're saying. So, what would be that number for FY23, if you can sort of guide for?
It will be more or less the same, actually, because our start date is, in fact, maybe we are late or early by about 2-3 days, so it will not make any kind of a difference. So if it is 380 for the season, it should be 380 also for the financial year.
Understood, sir. And sir, when we say that we are going to get our sugar production down by maybe close to 30%, so then that in that context, we are saying that the total sugar produced by us would be closer to around 3 lakh sort of metric tons.
3 to 3.5, 3 to 3.5.
Okay. So in that case, if you can help us, what would be the ethanol produced through the juice route, and what would be through B-heavy in terms of percentage, if it's possible?
See, we are going to run the sugar distilleries on the juice during the season 2 of our plant. So we should, out of 11 crore liters, maybe 5.5, 6 crores from juice, and the balance from the B-heavy molasses.
And so, sorry, just asking regarding this economics, because if I understand, even at current prices of sugar, through B-heavy route, I believe that it is the most profitable, right? And then it's the juice route. So, are we fixated on this, or we are going to be very flexible, whenever there are new prices for ethanol get announced, and if it's not as much as we want for juice, then we will sort of go back to, more B-heavy and less juice?
No. You see, if you want to optimize or maximize our production numbers, this is the model we have to follow. We cannot make a bigger deviation. There can be small deviation, but there can't be a bigger deviation.
Understood.
Yeah.
And so, just on this 38 lakh metric ton of sugarcane crushed, so compared to our FY22 number, then there is no major jump in terms of the availability of sugarcane.
See, even if there is increase in the cane availability, that will get reflected in the numbers of 23-24, because the start crushing date is the same as it was the last season. So the number of days we get to work the sugar plants during the season is going to be the same as it was in the last financial year. So, for example, if instead of 380 we do 390 or maybe 400, that part of the incremental part is going to be reflected in the working of 22-23. 23-24.
Understood. So in that case, because we are completely shifting more towards juice and more towards ethanol route, would you sort of mind giving some kind of guidance in terms of what kind of EBITDA we can achieve in 23 and specifically in 24 operating at peak optimization?
That's very difficult, actually. I cannot give any guidance on that. Yes, all I can say is the numbers are going to be definitely better.
Got it, sir. And just one last question. You mentioned that for the upcoming quarter, the sales volume for sugar would be somewhere around 50,000 metric ton, right?
50,000 metric ton is export. We will of course sell whatever quota we get for the month of October. We sold whatever balance of sugar was there, which was about 18,000 metric ton. Yeah. November the releases are very because we have no sugar stock, so we're going to be producing sugar stock only in one of the units because in rest of the 2 units we are going to be producing raw sugar for export. Okay, so in the month of December, yes, we would have production of white sugar because in both the units, in 2 units we will be producing raw sugar up to December end, if not maybe a little early also. But yes, in December, whatever quota we get, we will be able to produce and sell white sugar as well as in the domestic market.
Understood. And this 11 crores for ethanol, which we are targeting. So then it's safe to assume that from the current quarter onwards, we will be operating at sort of on a quarterly run rate on a peak.
No. Because in this quarter, we're going to get only 2 months.
Understood.
November and December. Yeah.
Got it, sir. Got it. Yeah. Thank you so much, sir, for answering all my questions.
My pleasure.
Thank you. The next question is from the line of Shailesh Kanani from Centrum Broking. Please go ahead.
Good afternoon, sir.
How are you, sir?
All fine. Thank you, sir. Sir, a couple of questions from my side. One question is on long-term capital allocation. As you have also mentioned that we will be working low and low on working capital, and as we keep on diverting towards ethanol, our need for funds would be lower. And I assume that given the balance sheet, we would be having good amount of capital getting generated. So any plans on FY24-25? I know you mentioned that there are a few things on the drawing board, but can you just little elaborate what kind of quantum we are looking at?
So these increased incremental cost capacity building, incremental adding up refinery, they all will involve an outlay of at least about 100 to 150 crores. So we will, I cannot spell out the number right now. We will first freeze our plans insofar as whatever capexes that we have in mind. And then we will decide and take the next step.
Okay. And so we are not looking anything on increasing the capacity on the ethanol front. Means right on molasses base, I understand you have already guided we are maxed out as per our catchment area or as per our production facility, crushing facility. But are we looking at grain as an option, which many of the companies are looking at, or are still be skeptical on that?
No, see, our ethanol generation will go up if we are able to increase our crushing in our units. So, as I mentioned earlier, we are planning some increase in the capacity at 2 of our units, which are in the Bijnor district. So, whatever increases there, whatever additional or incremental crushing number we have from those units, we will obviously be generating DAV molasses, and we will also use some amount of juice from there to make ethanol. So 11 crore liters can be made from our units in about from our distillery in about 320 days time. So we will have there is already some additional inbuilt capacity in our distillery. So I mean, if there is more cane available, more crushing, 11 crores can easily go up to 12 crores also.
I think my question was more on grains front. Are we looking at that as an opportunity?
As of now, we are not contemplating grains.
Okay. And it's not on the drawing board as well, right?
No, not at all. Not at all.
Okay. I think so. One more question. When you said that you have contracted export 50,000 metric ton, you said the realization of 36,000 per ton. Did I? Sorry.
For Kandla.
Yeah. So that was raw sugar, right?
Yeah. raw sugar.
So that implies that we have got a good polarization premium as compared to the US cent rates, right? That is what I need to understand.
Yeah. Presently, Indian sugar commands premium, polarization premium.
So what is that percentage would be?
We contracted when the price was around 18.6 cents or so. Okay. So typically 18.6 cents per pound. Okay.
So that was some time back, I guess, because that rates have not been there for long because they have crashed very quickly. They have come down very quickly. So we've been able to catch the top, I guess.
18.6 into 22.97 is the factor. 22.97. Then multiplied by, if we take 83 as the dollar price. So if I were to go by this, I would have got about 35,500. I got 500 extra by way of premium.
Okay, so we got good rate on the raw price front as well and exchange rate as well. 83 we got. Okay.
Exchange rate is going to be good. Raw prices will be, of course, dependent on the crude prices. So
right.
If you see the trend of the prices, there are occasional spurts. So all you need to do is remain vigilant, and whenever those occasional spurts in the prices, international prices happen. So that's the time when one should be looking to contract the export contract.
Great. Oh, okay, sir. That's all from my end. Thanks.
Thank you so much. Thanks.
Yeah.
Thank you. The next question is from the line of Nimish Seth from GT Advisory. Please go ahead.
Good afternoon, sir.
Good afternoon, sir.
Very good afternoon, sir. How are you, sir?
Hi, I'm good. So anyway, all the best for the coming season. I think many of the assets are in place. I have two clarifications that I need to ask. I couldn't hear the closing stock number. You said you had 18,000 tons of closing stock. Is that correct?
Correct, sir.
And what is the value of that per kilo?
So that value is obviously higher. That's about 3,490 plus. So anyways, there is going to be
around 35 rupees. Okay, fair enough. Second is, when are you starting crushing at your 3 units?
We have already started crushing at 2 of our units on the 28th of October.
Okay, and one is on the 9th or 8th?
8th of November.
So all conversations in the course of the Q&A, but I missed a few. And if I recall in the last con call, you had mentioned about the need for a refinery, which is what you don't have.
Correct.
So, and I think you mentioned you're planning to put up a refinery and you would, have some project in mind. So has anything been finalized or?
By January we will finalize, sir.
But why are we delaying it? How long does it take to set up a refinery?
Once we take all the calls in January and once we place order for machineries, etc., immediately thereafter, the refinery will be up and running for season 23-24.
Okay, perfect. All right, sir. Thank you so much. Wish you all the best. Thank you.
Thank you, sir. Thank you so much.
Thank you. Bye.
Thank you. The next question is from the line of Udit Gupta, an individual investor. Please go ahead.
Good afternoon, sir.
Very good afternoon, sir. How are you?
I'm good, sir. So my question is that, sir, that 11 crore liters that we're looking at, so does this take into account the extra 2% levy molasses?
Yeah. It takes into account. Yes.
Okay. And so you said that roughly the blend will be like 5.5 crores from
5.5, 6 crores from cane juice and about the balance from the BAB.
Yeah, so it's almost a 50-50 balance that we're looking at.
With upward bias for juice.
And sir, my question was that, sir, like you just explained so many times in the last few questions that right now we're not looking at any other ethanol expansion. So, but the crushing that we are looking to increase after that, is it possible to increase this?
Yeah, of course. If our crushing numbers go up, obviously our ethanol production also will go up. Even with the same assets, let's say instead of 38 lakh tons of sugarcane crushing, if we do 39, obviously that will result in more generation of ethanol, molasses and juice, and more production of ethanol.
Okay. And sir, this surplus cash that we are looking to build now and that we built, any potential uses of that other than the capex that we are planning?
So we will see. I mean, of course, once we are ready with our Q3 results, I think that time we will have more clarity, and I'm sure whatever is the most productive way of utilizing the money, we will do that, sir.
Thank you so much, sir.
Thank you, sir.
Thank you. The next question is from the line of Ashok Saini, an individual investor. Please go ahead.
Good afternoon, sir.
Good afternoon, sir. Good afternoon. Sir, there are few questions from my side. What is the cost of ethanol derived from B heavy or C heavy?
Sorry, sir?
What is the costing of ethanol derived from B heavy and C heavy?
Sir, the costing more or less, there isn't much difference. But why B heavy molasses is more attractive is because of the selling price of B heavy molasses. So selling price of B heavy molasses is almost 59 rupees, whereas in case of C heavy molasses, it's substantially lesser.
And what about the costing perspective?
Costing, there wouldn't be much difference, sir, because typically we take 10 rupees a liter as the cost of conversion. So if the B heavy could be 10 rupees, then maybe C heavy could be a little lower.
Okay.
Yeah.
Another question is related to meet out the levy obligations. What are the plans that you have met out your levy obligations to B heavy or C final molasses?
No, B heavy, sir. We are going to, because the policy, whatever be the percentage, the policy will be fair in the sense that due factoring will be done for the yield coming out of B heavy molasses, and accordingly, the quantum of B heavy molasses that will have to be offered for levy purpose will be lower. So it will take into account the relative yield of both C heavy molasses as well as B heavy molasses, and accordingly, yes, the base is going to be C heavy molasses, and B heavy molasses levy obligation will be a derived number from the obligation in terms of C heavy molasses.
And what is the percentage of levy in case of B heavy?
So this, in case of C, it is 20%. So in case of B heavy, it works out to about 15.4 or something like that.
Okay.
So it's it's simple. It's in case of B heavy, it is C heavy. It is assumed that the yield is 22.5, and in case of C heavy, it is assumed that the yield is 22.5, and in case of B, it is assumed that the yield is 30 liters of. So it's accordingly, the numerator is 22.5 and the denominator is 30.
Okay.
Yeah.
Thank you. Thank you so much.
Thank you, sir.
Thank you. The next question is from the line of Ashish Pandey, an individual investor. Please go ahead.
Hello, sir.
Good afternoon, sir.
How are you, sir?
Very good, sir. आप बताइए, sir. How are you?
सब बढ़िया, sir. सब बढ़िया. Thank you. Sir, I have two questions. I see your balance sheet on 30th of September. You have got 103 crores of inventory. And out of that, 60 crore will be tied up in your sugar stock. Is that understanding correct?
Sorry, sir. What's your question? Can you repeat?
On total inventory, you have...
Mr. Pandey, the audio is breaking from your line, sir. Please check.
Now is it clear?
Yeah. Please go ahead, sir.
So, sir, the inventory figure on 30th of...
Sir, your voice is still breaking, sir.
Hello, now is it clear?
For a moment it becomes clear, sir, but then again it starts breaking.
Oh, sorry, I'll try my best, sir. So, how much is the inventory tied up in sugar stocks as of 30th of September?
So
I think it's 63 crores.
Yeah, 18,000 metric tons multiplied by 35. So that is what it is.
Yes, sir. And second question, sir, how is the sugar selling price you are getting in this quarter so far, and what's your expectation for full quarter?
Sir, I think we have given it in our investor presentation. Let me tell you, in this quarter, we got a realization of close to 3,000.
No, sir, I'm talking about Q3. I'm talking about Q3.
Q3 so far is about 35.50 plus, sir. 35.50 plus.
Oh, 35.50. Okay. Thank you, sir. Those are the questions.
Thank you, sir. Thank you.
Thank you. As there are no further questions from the participants, I would now like to hand the conference over to Mr. Vijay Banka for closing comments.
Thank you, friends. Thank you for your active participation in this conference call. And I must say, very interesting set of questions from your side. And I hope that I've been able to answer you all satisfactorily. Yes, the results of the quarter have been under stress. There has been contraction of profitability, but yes, this has been one-off kind of a quarter with some non-recurrent kind of expenditure and happenings which got factored in the results. Going forward, yes, in Q3 we will have 2 months of working for the distillery, so which we should see ethanol production accordingly in these 2 months. Fourth quarter, of course, we'll see brisk activity insofar as sugar as well as ethanol production is concerned. So we do hope and expect that the recovery trend for the coming season will be better. Let's wait and see. We are optimistic about that. Thank you very much. Thanks a lot for reposing confidence in us. We are extremely delighted to be participating in this conference call. Thank you once again so much.
Thank you.
Thank you, sir.
Ladies and gentlemen, on behalf of Dolat Capital, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.